make sure you hit the subscription button and make sure you comment and also like. Yeah, so today I want to share something on market structure. This is an introduction to market structure. All right, I want you at least to understand what we mean by market structure when it comes to forex trading and any other charts. All right, so basically, market structure refers to the evolution of market movement. All right, the price usually makes repetitive movements that form a structure. All right, so as I always mention in my private classes, I always say market structure is the foundation of price action, all right, or of technical analysis. Once you understand the concept of market structure, everything else becomes simple. All right, when you look at the charts, reading charts becomes very much easier. All right, because this concept alone can help you analyze the market or see the market in different ways. All right, so like I have said, it usually makes repetitive movements that form a structure. So already when you are able to see something that is repetitive, know that you will see it in the future, or probably you saw it in the past and you are seeing it again. All right, so it makes trading very easy. All right, so this concept is universal. It relies on your understanding of swing highs and swing lows. All right, so how will you understand your highs and your lows? Your swing highs and your swing lows will really determine how good or effective you are going to be, all right, in your analysis or in your trading. All right, so it's very much important that in market structure you understand the swing highs and swing lows, and most importantly, you also learn or train your mind or your side on how to identify them. All right, so generally the market trades from a low to a high and back to a low. All right, so this is how the market trades. So as these lows and highs form, they will develop what we call understanding swing highs and swing lows is really important. Okay, like we said, your understanding of swing highs and swing lows really determines your success under this concept. Okay, so now we have a swing low, we have a higher high, we have a higher low, higher high, higher low. Like I said, market trades from a low to a high, then back to a low, then back to another high, and back to a low. In the case of a downtrend, there we see that price trades from a high, okay, then to a lower low, then back to a lower high, lower low, and lower high. Okay, so market structure is characterized by this. How you understand this information is really going to help you understand the rest of the concept. Okay, so this is market structure, these are your swings and these are your
let's look
highs.
at break of structure.
Okay,
So now after you've understood your swing highs and your swing lows, you know that this is how market trades. It trades from this point to that point. Now there is what we call break of structure under market structure. The break of structure occurs when the price closes above or below a swing high or low. Generally, okay, so we are trying to define a break of structure, and also I'm trying to explain how you can trade the market. Okay, so generally it's important to spot these moves on the higher time frame. Free advice: always look out for this break of structure on the higher time frame. For a retail trader, the 4-hour chart is good, the 1-hour chart is good. Then your entries, of course, everyone has to have a time frame of entry. Okay, so after a break of structure, always wait for a retracement for entry. Retracements are entry criteria, so it's important that you look for entries on your retracement levels. Okay, and always make sure that you trade in the direction of the break of structure. Always trade in the direction of that break of structure, because where market breaks towards simply means that market is weak on that side, and meaning that it's going to be pushing from its strength towards the weak. So it will be breaking every weak area, meaning that you have to trade towards that. And as it will be breaking towards that direction, it will be creating a trend. Okay, so after a break of structure, wait for retracement. to 50 or 61% of Fibonacci levels. There are 4 percentages that we know. There's 23, should be 38. Then we have 50 and 61. So these levels are very much important under this concept. Okay, so now that you know what Brickle structure is, way to understand Brickle structure in practical is by looking at this graph right here, this example. Okay, so if you look at this, you look at how price has been moving on this, you notice that price is coming from if you come here where there is that letter A, you notice that price is coming from it's trending downwards. And as it is trending downwards, we are noticing a break of structure. And like we define it, break of structure occurs, okay, break of structure occurs when the price closes above or below a swing high or a swing low. So looking at this, that is our swing low, and price went beyond that low, meaning that it closed below. Okay, if you look at each low there is another low below it. There is another low, meaning that the previous one is being broken, and is being broken, and as a result we have what we call breakout structures. Okay, and like I advised, always look out for these breakout structures on a bigger time frame, like the H4, H1. Then you can determine your entry on the lower time frames. Okay, and the other thing that I mentioned is that always make sure you trade in the direction of the breakout structure. If you look at this trade, it is trending downwards, and as it is trending downwards, market keeps on breaking towards that place. Okay, so it is very much important. Okay, so if you look at this whole structure and how it moved, you notice that there is always breakout structure. If you come here, okay, down there is B, and the market starts to go upwards, our breakout structure is now upwards, and like I've always said, always trade in the direction of the what? Breakout structure. Okay, I'm sure you can also see the little retracements that are going down there. If you bring up your Fibonacci retracement level here, you notice that these retracements are stopping right at a point of either 61% or 50% of the retracement of the Fibonacci levels. Okay, so those are areas of entry. Those are areas of entry where we see OTE. Those are areas of entry for us. Okay, breakout structure there simply confirms that this market is going to move in this direction. It gives you confirmation of direction one. It also helps you with an entry. Once you see that retracement, that backward move, then you bring in your Fibonacci retracement levels and you put them there. You notice that market is going to work exactly as your theory says. So this is how easy you can trade the market. Okay, sorry, I'm just showing off. Okay, so back to this example, right? If I take it back to, let me use the 1 hour time frame. You notice this trade is going downwards. If you look at it, it's a pure market structure analysis. Okay, look at where our entries are. They are right below after the what? The breakout structure. Okay, this is something that is very unique about this trade, something I can give you as an example. So if you look at all these entries here, okay, they are coming after, right after our breakout structure. Okay, so here is where market broke the downside. Okay, that is why we saw a downward break. So this is our breakout structure. So as you can see, market kept on breaking this side. Okay, this side kept on breaking, and each place where market was breaking, we were seeing what we are calling a retracement. It would have also been good if I placed my entries right at this point, okay, by making sure I apply my Fibonacci levels. Okay, it would have been a cool entry, but I was late. I only got to see this trade when it was almost breaking structure. So after the structure broke, I saw that okay, it has gone, it has closed, it has broken the structure. I placed my entries. Okay, so if I were to bring in my Fibonacci level here, just to make, oops, let me bring in my fib. Okay, is this the right way? Yes. So let me just edit it so that we have good color. Okay, let's go for red. Okay, trying to change the color on. Okay, I'm sure you can see. So if you look at the numbers here, you will notice that this retracement came started reversing right at 50, at that 50 there. Okay, right at that range. So always trade where the numbers that I've told you, the theory that I've explained, and everything that I explained is matching. So this is a very simple concept, and this is market structure 101, an introduction. There is more details. Okay, so just make sure you subscribe, you hit the like button. Yeah, probably another one will come, more detailed information.